Oh, hello everyone, and welcome to today's session where we are going to be looking at what's going on in the futures market, particularly the indices, and we're going to be looking at some stocks as well. But before we do, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Very, very quickly, because I just had a quick look through the attendees, and I can see some names that I don't recognize. I can see some of our Forex for our Forex program students, some of our quantum trading users. And as I said, some of you, forgive me if I don't recognize you, maybe it's your first time here. If it is, what we're going to be looking at is obviously those markets and the charts that go with them. And the technical analysis side of the chart, we're going to be using the VPA methodology, which is basically price action and volume, and its relationship and what it can tell us about what is happening on the chart, but much more important, what is actually going to happen next, because that's all we really want to know. We want to know, where is the market going to go next? You know, I mean, that's sort of, it's a bit of a given, but sometimes it's worth just repeating. And the concepts for the methodology you will find primarily in this book, A Complete Guide to Volume Price Analysis, which is up on Amazon. And to go with it, there's also now a companion book of worked examples of charts. There's over 200 charts, primarily drawn from the indices, stocks, and there are some commodities as well. There's also a version for the Forex market. And the reason why we've done this is, first of all, to show examples, as I said, of what to look for of VPA. I use the word signals, but I have to be a little bit careful, because they're just sort of points in the chart that you have to pay attention to, because they are giving you some very, very important information. It's not really a signal. It may be, you know, a reversal is coming up, something is going to happen, but it just prompts you to pay attention to what is going on in the chart. And the great thing about VPA is that they repeat these prompts, these examples. They reoccur in different time frames and really across all markets. And in fact, I've got even in Bitcoin, you've probably picked up across your news feeds that Bitcoin has come down to the 30,000 level, the 29,000 level. It's been in congestion since the 17th of May, when it had a really quite a strong sell-off, and then some buying came in, and we had a volatility candle. We've written about it on my site, and it's basically been moving sideways within the spread of that candle. And if you understand price action, and you understand chart structure, and you understand the kind of patterns that, you know, occur on charts, you would know that, you know, you have to be patient. Very difficult, I know, for a lot of traders, but we'll go through that. We'll look at some charts. I've got some very interesting charts for of stocks, but what I'm trying to say is, whatever chart we show you, be it an index, be it a stock, be it a Bitcoin chart, that chart pattern, that action that you're seeing on the chart will appear again in a different market, in a different context. So once you know the concepts of VPA, you can, you know, you have them for life, as it were, and you can then apply them to whatever you trade and invest, because the only difference between trading and investing is the amount of time that you stay in the market. As a trader, you may stay in just for a few minutes, a few hours, but as an investor, you know, you may be looking to hold something much longer term. So the principles, those are the general approach of VPA, and the elements that make up VPA is obviously the volume, the price action. We use candles and candle patterns, and support and resistance. And I mentioned in our Forex session earlier on, I can't stress enough support and resistance. How you display it on your charts, what you use to highlight those key areas where price it possibly is going to pause, possibly is going to reverse. that's up to you. The way we do it, we use price-based support and resistance, and we also use volume-based support and resistance. And what happens with support and resistance, once you get areas where price is going to stop, and at some point it will then develop into, for a reversal, you will then get these zones of supply and demand. This is all semantics. You know, there are all these labels in trading, ways of describing the price action. But essentially, as as a trader, as an investor, a price goes up, it pauses, it gets to another level, and then it reverses. The trend is then down, it pauses, it may continue, or it may go back into the primary trend higher. And what VPA does with, as I said, with these 5 elements, it tells you where you are in that journey for that particular instrument. And once you can recognize that in a chart, oh boy, you know, it's like the scales, you know, drop from your eyes, as it were. And I know that for a fact, given the, I would say I have at the moment 400 emails that I have to reply to. 400, which is pretty sort of standard for me. Might take a bit of time to get round to them, but I do get round to them. And there are 400 different traders, investors who've written to me, some wanting clarification of one point or another, but the vast majority of them say to me, the one thing they say is once they start looking at charts through the prism of VPA, it really does completely change their fortunes and also the way they look at the market. So I'm going to get off my soapbox now about VPA, and that is your foundation. What it gives you is your foundation understanding about price action and chart structure, chart patterns. On top of that, you can overlay whatever indicator you feel most comfortable with. We have developed our own proprietary ones. It could be standard ones, proprietary ones, and then everything is placed over this wrapped. You have time wrapping around everything, and by time, it's not just the time frame that you are trading, but also multiple time frames. Right. I shall stop that there and take that down. I've just got MT4 up to date, and I have I've actually got Trading View for the stocks. So we'll hop along over there in a second. But I just wanted to show you the setup that I have here on my MT4 platform. This is actually a derivative, a version of the US 30, the Dow Jones cash. And I have 5 charts. This is what I said about multiple time frames. I have the daily chart on the left. I have the hour. I've got the 15-minute, and I've got the 5-minute, and I've actually got a Renko chart, which is a non-time based chart. Now this particular setup is for short-term trading. This is only for trading. This is nothing to do with longer-term investing, longer-term holding of the index, but it's to give you an idea of what I mean by multiple time frames, looking at levels, and also referring to the slower time frames for an idea of what is likely to happen in the faster time frames. And the first thing I want to refer to is the daily chart, and I've just expanded it because I mentioned something called the volatility candle with regard to Bitcoin. What we've developed in as part of the quantum trading tool set is in fact an indicator which we call the volatility indicator, which triggers in real time. And what it does is it's when the price action is outside of the average true range. And what it does is it fires off these little purple arrows, and what we deduce from that, it's basically when there's momentum comes into the market. It's quite a lot of volume under there as well. Not extreme volume, but you know, there was volume under this candle. There's also a little bit of buying that came in late in the session, as we can see here. This was not buying. What am I talking about? There was the low, and then it closed higher. And it's kind of given a bullish engulfing to the down candle that we see that preceded it on Friday. Obviously, the price action we're seeing here the down candles, where we did actually have rising volume as well, was as a result of the FOMC. Now, those of you who were with us last week will know that was the main event on Wednesday, and boy, oh boy, you know, they certainly put their mark on the markets. It was also quadruple witching on Friday as well, so that the market would have been in a heightened state of volatility, and it was preceded by the FOMC comment saying about interest rates. I'm sure you've read it in your news feeds, that interest rates will rise possibly in 2023. Just remember, just hold that thought in your head. But markets, you know, as we see, have you know, took a bit of a swoon. David and I have taken the view that it's more of a shakeout, because if you actually step back and, you know, listen to what they said logically, yes, we know interest rates are going to have to rise. Yes, we know markets have been a little bit fragile, but seriously, 2022, 2020, anything can happen between now and then. And, you know, there's an equally strong case for possibly not rising. Maybe we have deflation, maybe we even have stagflation. And what I would say with regard to this inflation narrative is the market we all need to pay attention to is the bond market. The bond market will determine, you know, what is actually going to happen. And it's quite interesting that the yield curve on I think it's the 5 and 30 is very, very flat, because with bonds, if you are going to lend money to anyone over a longer period of time, you would expect your interest rate to be, the interest you charge would be much higher, because you're taking you know, greater risk. You know, you're not going to get your money back for, you know, so many years down the line. And that's not happening. You know, the short-term interest rates seem to be rising, but longer-term interest rates, they don't seem to be going anywhere. They're going down. What does that tell you? That's pretty much not what the Fed are doing. And what I would also say is look at your calendars for certainly the rest of this week, because there are Fed people coming out of the woodwork, and I think Powell is up later as well. So the Federal Reserve is having a huge influence on, you know, what it always does happening in the markets, not just the US markets, but, you know, the global markets as well. So we had this trigger yesterday. We had a fantastic trading day yesterday, nice big strong up candle. But because the volatility was triggered, what tends to happen with the volatility is the price will then retrace to within the spread of that candle, where it will possibly congest, possibly even reverse, or it may carry on in the direction of the previous day. But the first reaction is to go back into that spread. And what we also have on the daily chart is we have the volume point of control. I said about these areas, support and resistance, price-based support and resistance from these lines that we see here, the solid, the hatch. But the volume point of control is volume price over time. So it marks those zones on the chart where, in market profile terms, it's called the value area. It's a congestion. It could be a very deep congestion, but the price is rotating around it. It's in a range, as it were. It actually broke through that, but it snapped back yesterday, and it's going to go back to the VPOC. But because it's an area where there's a lot of dense volume, to go through is going to take much more effort, and that could act as a cap to a move forward, or at least slow any process down, unless somebody comes out and says something dramatic, and away you go. On the hourly chart, we have another way of describing price-based support and resistance, and that's using the Camarilla protocol. And as we can see here, this is the price action at the moment. It's basically moving sideways. It ended the session yesterday actually with again a volatility candle, and it's reacted as we would expect. It's gone straight back into the spread of this candle. So it's when you have the volatility triggered, the reaction, you have to be a little bit patient because we have to wait and see whether the price then clears the top and the bottom, because the high and the low of the candle also gives you another other levels that are that can be key, if you like, to the price action progressing. The Camarilla itself, the third level, the fourth level are very important on the hour. These levels are in play for the rest of the week on the 15-minute chart, and below they are, in fact, I think I don't have them here. Let me just put them on very quickly. They are refreshed every day. Let's have a look. Hopefully they've come up. There we are. Yeah, there they are. I've just scrunched it up a little bit. And again, on the 5-minute chart, this is the usual nonsense that we get at the open. Great big surge of volume down, volatility back into the spread, straight into the volume point of control. Another attempt to sell off. Again, volatility back into the spread. Then we've had this little hammer candle that we see here. It's actually bounced off the S2, but also the outermost volume from the volume support derived from the volume point of control, because the volume point of control also posts its own levels, as we can see here. And when it coincides with a price base, which we have here, price on the S2, and we've got volume, and we've got a hammer candle, that is this is a classic VPA signal. It's you know, the price is pushed down, hit these supports, the volume comes in to support the buying, and now that's just one signal. Really, we do have to, you know, wait. This is actually quite unusual. It hit those levels and it's almost gone, you know, it's gone straight up. The problem here we have is that the volume under this candle is the same as this one. Really, for the range of that candle, we would want to see a little bit more, but it's gone higher. It's hit some resistance up here. Then this candle's quite interesting because it then immediately kind of reversed. There isn't volatility, it just reversed into it. But look at the volume. That's actually quite encouraging, because if this was going to carry on lower, that needed to be higher if this was going to be a sort of fake move, as it were. The problem we have is the up candles have got wicks to the top, which are always a sign of weakness, and the volume is falling. It's also hit the volume point of control here. This is now forming. So yes, it has bounced higher, but it's, you know, it's got a struggle, but it's got a struggle here on the 5, and it's also going to struggle when it gets to the slower time frames because of the volume point of control. Now I actually have it on a Renko. I'm not this is a non-time based chart. This gives me a sense of the momentum, and there isn't any momentum today, certainly not like yesterday. And I can understand why, because if we go over to the news, let's have a look, the fundamentals. If I can find let's have a look. It's just a bit, oh, there we are. There we are. Let's have a look. I've actually got 3 calendars up at the moment. I've got Forex Factory, which is like a cut down. Here we are. This is the one that everybody has been will be waiting for. We've got daily speaking, but there has been, Williams has been speaking as well. I've got Financial Juice, although he may have disappeared off the calendar. Let's have a look. Yeah, he's disappeared off this one, but I have a backup calendar, which is from tradingeconomics.com, which is very comprehensive, and hopefully he will be there. And this can be, you know, as I said, it's, you know, the news, sometimes the news feed is, your live news feed is, you know, more up to date than the calendars. And I know Williams was speaking because it appeared on, here we are, Fed's Williams, and for some reason it hasn't appeared on the calendar. At the moment, the markets are being, you know, they're looking to the Fed whoever, whether they're voting members or non-voting members, their comments are being sort of, taken very, very seriously, and they are going to have an influence on what is going on. Very, very quickly, that's the Dow. That's sort of down a little bit. The S&P, that's up slightly, and let's have a look on the Nasdaq. Nasdaq is a little bit more positive. This is, if we look at the chart here, David's got in more detail. He'll go through with it. We've always said 14,000 is a very key level. If it gets through that with good volume, it's going to be in a good place to form a very strong platform of support. And the other index we like to follow now is the US 2000, which has been a sort of really, up and down, and had a fantastic day yesterday. I suspect, I don't have it on here, that will have been a volatility candle, which is why we have the retrace into yesterday's price action. So a little bit all over the place. There's no sort of strong consistency, but generally speaking, last week we would say very much a shakeout. Watch the bond market, and for overall market sentiment, as it were. And once you have that in the back of your mind, you then look to your individual charts, use the VPA concepts with the price action and volume, and just take it on from there. It's really pretty straightforward. Now I'm actually going to stop here because I'm going to pass over to David, because he's got, what have you got? Ninja Trader, love? David, they've got Ninja Trader, and what have you got? Trading View as well. Ninja Trader, yeah. Just to carry on with a more comprehensive look at the indices and see how they're all stacking up against each other. Then, if we're going to come back, because as I said, we're going to look at stocks in more detail. What I've done is I've actually put together a little collection of 4 stocks today, and I'm actually going to follow them. We're going to follow them in subsequent sessions, and they're all very interesting from different perspectives. And we're also going to have a look at one of the meme stocks that have taking the traders by storm at the moment. I'm actually going to look at Clover. I'm not going to do GameStop or AMC. I'm going to look at one called Clover, because there's all sorts of lessons that you can take from that you can apply to whatever you trade. And if you've got any questions, just pop them into the chat box. More than happy to answer them. And we'll, as I said, and it could be on anything, on VPA, the indicators that we use, anything about the market. As I said, more than happy to answer them for you. With regard to what is going on here, really going to have to wait and see. That was a nice little move based on that, on the hammer candle, which is based on classic VPA 101, but support and resistance are such a huge element of volume price analysis as well. And the volume point of control is such, once you have this marked on your chart, everything is derived from there. So I'll just pass you over to David.
Hi everybody, warm welcome, good to see you. Just starting with Trading View, just click that off there, just move that out of the way. Very quick, I just pulled this up this morning. This is a new indicator we're working on. This is for cryptocurrencies. This is cryptocurrency strength indicator, and if you think it looks like the CSI, you'd be right, because it is based on those same sort of principles. This is on 1 minute, so I've got 1 minute. This is Bitcoin against, all these are against Tether. We've got several down here, we've got 7 down here. They're all based against Tether, which is tied to the dollar. So we are basically looking at cryptocurrencies versus the dollar. So we've got the dollar up here, which is, as I say, is Tether, and the cryptocurrencies en masse down here. You have the option to, you can change them around. You can have preferred ones. Just very quickly go up here. You've got all these options down here. So you've got all those cryptocurrencies, basically all the ones that are on the TradingView platform, you would have access to them against Tether on this particular indicator. It's in development. We don't expect, it's not going to be too long before this is actually launched. It's just, it works in all time frames, very similar principles to the currency strength indicator. You're looking at overbought, oversold. strength of trend, rising lines very strongly, falling lines very strongly. The difference here is obviously you are looking at a, if you like, a pair. In other words, Bitcoin against the USDT, rather than the currency strength indicator, we're looking at individual currencies. But other than that, the principles are very much the same. It's very exciting. And of course, if you have the full TradingView package, then you will get this free of charge as always. This is what's going on in terms of indices, currency indices. That's the pound. Pound's rallying a little bit at the moment. This is the yen. You can see the yen's falling quite nicely, so we should see, in terms of sentiment at any rate, you know, that should be good for indices, should be rising gently. In addition to that, we've got the dollar falling. This is the dollar index. These are on 5 minutes, so pretty quick. So we've got basically these two are falling, which is what we want to see. If we want to see indices rising, we've got dollar falling and yen falling. And this is over on, that's the euro, which has been going sideways for most of the day. Over onto the NinjaTrader platform, this is basically the three primary indices. We've got the YM bottom left, NQ in the middle, and the ES on the right-hand side. I flashed these up briefly this morning in the currency room. This is the key thing, the fact that we've got volatility trigger. As Anna said, we've got a volatility trigger on the day. We've got a volatility trigger on the daily on the ES as well. You can see it there. The only one that hasn't reflected that is the NQ. And neither, can I say, did the NQ reflect any of the cataclysmic price action that we saw on the other two. And as you can see, the NQ is carrying on in its own sweet way, as it's been doing for an awful long time, dragging the others along behind, particularly the YM along behind it, oblivious to statements from the Fed or anything else, quite happily bullish, continuing to remain bullish. And I have to say, that piece of price action in there really does reflect the nonsense that followed on Wednesday. Now, that's not to say that you don't follow the market reaction. Of course you do, and you take advantage of it. But in the back of your mind, you've got to have a semblance of reality, have a reality check, and realize that what is going on is nothing more than an opportunity for the insiders and market makers to crash the market, clean up, and reinstate the original trend. And that's basically the long and short of it in a nutshell. It's as simple as that. Now, you've got to take advantage of that price action, but you've got to have that in the back of your mind. There's a lot of people out there writing about, oh, it's going to be the big short and blah, blah, blah. What, seriously? We're talking about interest rates in 2 years' time? I could say to you, for example, as I said this morning, it's good news and bad news. Oh my God, interest rates are going to go up in 2 years' time. Market crashes. Great news, interest rates are not going to go up for 2 years. There you have it on a plate. That's the YM. That's what Anna's been looking at on the daily. Where are we? Well, you know, we're at the volume point of control. So there's a couple of reasons why you should expect to see, certainly in terms of YM price action at any rate, sideways price action, because we're at the volume point of control, and we're also likely to be trading within the spread of the candle on the daily. In terms of the NQ, it's a very different picture, as I say. It's really a question of looking at when we get a break beyond 14,200, and then obviously once we get through there, there's virtually no volume at all up there because we're breaking out into new high ground all the time. So we'll be stepping down onto the weekly to find out where we're going there in terms of levels. In terms of ES, I suppose the ES is somewhere between the two. You could say this is, you know, an engulfing candle. The ES remains pretty much bullish. We've got a transitional color change here, but I would imagine that will reflect back again. Obviously, what we're looking for here is to break through the 42.60 area and on up. But again, hardly a dramatic fall in terms of price action, again, to reflect what went on the other day. In terms of intraday, where are we? This is on the 5 minute. Volume point of control very much in evidence on the YM, starting to move away from it on the NQ. Volume is falling away, but then that's always what you expect. You always get the big surge at the open. So when you see this sort of volume, you know, don't suddenly think, oh, this is, you know, volume falling away, market rising, volume falling. It's weakness. It's simply reflecting the surge in volume that comes in at the open, and then it starts to flatten out and you start to get into the session. The nice thing with this, with the NQ at the moment, is we have this very well-defined level of resistance here, and this blue line, this blue dash line, that's on the accumulation distribution indicator. You can see we've got other levels down here which acted as support. It's an immensely powerful indicator because it presents those levels graphically as strong or less strong. Thicker the line, the stronger the level. Thinner the line, less strong. So we've got a pretty decent level here. It's already been tested several times, trying to break through there. If we get a decent close above that, then you've got a nice platform of price-based support in below. And in addition to that, you've also got volume falling away here on the VPOC. So, you know, two reasons to look at that from a positive perspective. We want to see a nice close above that. Don't want to see any spiky stuff up here. We've got a horrible spiky candle in that last one with, you know, reasonable volume. So you want to see a nice solid close, no big wicks top or bottom, just nice steady candle, and then maybe a couple candles more. And once that develops, and given that the yen, I'm just looking over on the right-hand side, the yen is also dropping away all the time, as is the dollar. So, you know, that's all positive. So that should help to push this through. And if we get a push through there, up into this low volume region, you know, that's maybe an opportunity to jump in and, you know, buy one or two contracts on that particular move. So that's where we are in terms of those three indices. If I just hop over onto the multiple time frames, I think I've got the YM set up there. Yeah, that's the YM. 15 second, 1 minute, 3 minute, 5 minute, 10 minute, and 15 minute. And you can see where we're going with all of that. And you know, the VPOC is very much in evidence. No great surprise. Down onto the 15 minute. You know, if we were going to take a trade, we're running into a huge amount of volume. We're coming up to the volume point of control here on that time frame. So if we're going to jump in and take a trade, it's not going to run very far before we run into this huge amount of volume, huge amount of price-based resistance up here. If we break through the other side, then, you know, happy days. Once we get through this lot, then as the volume falls away, you know, on 15-minute time frame, you know, that's a more straightforward path of travel. But at the moment, you know, this is going to take effort to push through all this lot. It's a real heavy headwind that's acting against the market right now. Let me just pass back to, let me just check with Anna. Sorry, be with you in a moment. Just getting the chart set up there. And as I said this morning, whatever time frame you're in, this is on 15 seconds. The principles are exactly the same. The indicators work in the same way. This could be any chart, happens to be the YM, September contract for YM, could be anything. We've got a nice level of, very strong level here of resistance, this blue dash line, in exactly the same way as it was on the other chart on the slower time frame, but it works the same way. You know, once we break through that region, if we get through that, becomes support, low volume falling away, you know, then we're down at the volume area here, and obviously all of this volume over here is being distorted by that huge one there. We've got another big one there. You can actually take those out on Ninja. If I just do that, you can filter it out. So it just works so much easier. There we go. Now we're breaking away. We're breaking away to the upside. The yen is falling away. Dollar's also falling, so that's positive for us. And I'll just go and check on the VIX in a minute, see what the VIX is up to. What do we see in those last two candles? That's fine. Nothing to frighten the horses there. Tiny little wick there, but nothing too major. Now we've got volume falling away a little bit, which is a little bit of a concern. Not an anomaly on that last candle, but certainly, you know, we've got volume rising, price rising, but volume falling. So as I mentioned this morning when I was doing this, it's not a strong signal, because what you want to see is the inverse of that. You want to see this going up, basically the two going up together. And the same is true on a downtrend. In a downtrend, you've got falling market, you want to see rising volume. In other words, volume is always rising in a trend. Okay, so, you know, this was no great surprise. We saw it coming, we saw volume falling away, market rising, weakness. It doesn't mean that this is going to roll over and, you know, we're going to be out of the trend we were in and, you know, there's nothing else to be done. All it tells you is there's some weakness coming in You can see the weaknesses come in. It's no great surprise. It doesn't shock you. And in addition to that, you've also got this very strong platform of support in below. You might be able to see actually this candle here actually tested that. And then we're off to, sorry, let's click that off. Messages in the VPA, getting a bit excited in the VPA chat room. On to the next candle. Nice, actually nice volume on there. Let's see what the next one does. Pushing higher. On up we go. Let's go down to a slightly slower time frame. Let's go over onto the 1 minute. There we go. What have we got in the 1 minute? Well, we've got a very nice platform of support in here, which is nice. We're now coming up to some low volume region here. So, it's not going to take so much effort to push through that particular area, which is also nice. You can see the trend monitor here is blue throughout. So, it's held us in through here. We've got a nice platform building. Let's go up onto the 3 minute. See what the yen's doing. Yen's paused a little bit at the moment on the index, but we're probably looking okay still. What have we got on the 3 minute? Moving up into a low volume region here. Yes, we've got some price-based resistance, which is going to come into play. The strongest level is up here at 33,800. So a little way to go. We've got a little cluster here as well. That could come into play. Generally speaking, we've got lower volume in here, which is nice, and then it falls away. So, all things being equal, provided we see some decent volume building under here as we move up, there's potential to go all the way up to this level before we actually hit some potential resistance at that point, all things being equal, as always. Then you're down onto the 5 minute, you look at it in other time frames, of course. Similar sort of thing, volume's falling away. I've got some resistance here, but volume falls away. Very strong level up here again. And up onto 10. Very strong level there, extremely strong. Once you get through this region, then you've got quite a nice area here, which is free of anything low volume before you hit this level here. Can I pass back to you, darling?
Yeah.
Okay.
I think the question we're sometimes asked is if you wanted to trade, wanted to go in and trade an index and you've never done it before. Obviously, there are the three main ones are the ES, which is the for the S&P. There's the YM, which is based on the Dow, and then the NQ, which is obviously the Nasdaq. There's also the Russell. Is it the RUT, David? I can't remember the RUT basically. And somebody said, well, I'd really like to get into index trading. What do you think I should start with? And we've always said that the YM, which is the Dow, it's a bit sort of stately. There's only 30 stocks there. It's what David does primarily, as I said, and also it's in the if it's the actual futures, it's 4 was it how was it 4 points? 4 ticks. The Dow, the YM. Why? 4 index points, isn't it? It's just one index point. That's it. So it's really, really straightforward. And as I said, a lot of brokers, such as the MT4, MT5 brokers, they offer a version of it, and you're really not going to, you're not going to be frightened out of it, as it were. Not like us. We started with the FTSE futures so many years ago. Anyway, right, back to stocks. This is the FinViz. Essentially, if you've been coming along regularly, we've been looking at all sorts of ways of trying to decide on stocks. What is the selection criteria? What sort of filter you would like to use? And what that's kind of working my way through this, and what I've now not decided on 100% definitively, but what seems to work quite well is using FinViz, which is free, looking at the different sectors. And the only filter I've used this time, I'm actually using just volume, and I've put anything that's over 2 million. because and that's the kind of a traded volume sort of over a period of time. It kind of takes out all the small stuff. I've just found that it's a really nice sort of benchmark to kind of use for the volume. It also cuts down the number of stocks that you would have to look at, and it's so simple to use FinViz. This is the section where it will pull up the stock. They're in alphabetical order. They're not in which is the strongest, which is the weakest, but you can choose any of the sectors. And if you recall, those of you who come along will know this is my lovely new toy that FinViz has, which is these lovely bubbles. And the advantage of using the bubbles, and this is where looking at the shape of the chart, what are you actually seeing? So when this is Intel, so once you understand chart patterns, chart structure, and you understand, you know what you're looking at in terms of VPA, you can look at that chart and you can really, it will jump out at you and you say, do you know what? That's not the chart for me at the moment. I'm looking at Intel at the moment. The great news about the way it pulls it up is it's just completely random. If you look there on, it says volumes, it's 3.9 million. So there's obviously Intel, being Intel, it's going to be a heavily traded and invested stock. But all we're looking at is what is the volume and what is, what's the chart looking like? Is it a messy chart? Are there lots of gaps? Is it in a trend? Is it in a congestion phase? Has it broken away from a congestion phase? Is it in a downtrend? Is it an uptrend? You should be able to get that absolutely immediately. And by looking at the volume at the bottom, I know it's not terribly descriptive, but it also tells you, if you look at Intel, and you can see, I can't hold it up, so you'll have to listen to my description. You can see that it's had in early May, it had quite a serious gap down from 64 down to 60. Then there was some volume, some buying. There's a doji candle, and the volume did come in. Now, but doji is really indecision, and the decision on this one was it actually sold off even more. It actually went down, as we can see here. I wouldn't say 52, but it lost almost $10. It wasn't a classic waterfall. And then, but it sold off. It's been, it's had an attempt to rise. If you look at the volume under the big, the up candles that you can see in the trend moving high, you've got a really nice big up candle there. But look at the volume. It's not really massive, but it's limped off higher. Then it went into a sideways movement, and it's kind of fallen. It's come down again. So this just happens to be Intel, but think about the pattern that you're looking at. Now, you could take the view that has this got more to fall? So you could say, yeah, you know what, or is it actually going to go back to 58 and then break higher? Is it a chart pattern that you as a trader, is this kind of pattern that you like to trade? Because as a trader, and you can only do this from experience, you have to decide what kind of pattern you like to trade. Do you like reversals? Do you like do you like sort of almost V-shaped reversals? Do you like more volatile stocks, as it were? Or do you like looking at a stock that's perhaps been in a congestion phase, breaking away, good solid volume underneath it, and then you join in the move either higher or lower? We can't tell you what will suit you. You have to discover that for yourself. But at least when you look at a chart, you will know what you're looking at, and you will say, do you know what? This really doesn't suit my style of trading, as it were. So that's just Intel, and you can just go. Now this is another one. This is ZS. Now volume-wise, not terribly. 448 doesn't really meet the criteria, in my opinion, of having a strong volume underneath it. But what does that tell you? It had a gap up, had a gap up, and it's actually in quite a nice trend. Forget that it's 220. I mean, it's just looking at the pattern on the chart. The question on this one is, well, if you're a reversal trader, has this got more to go, or do I actually wait for potentially a reversal? So you just perhaps put it on your watch list. And I'm just find a really horrible one so that we can see. This has had a, what's this one? Cloudera, low volume, but a massive a jump up, maybe on some news or something like that. With that kind of volume, the lower the volume, you're going to get more volatility, and that's another thing you have to decide. The volume that's traded will also tell you, in a way, whether the stock is going to be very volatile or not. You can tell, you will have that metric as part of the screening, depending on its beta. If it has a high beta, it's going to be volatile. But you can also tell, if it's got big moves and, it's not trading a lot of volume, then it's going to be jumping about all over the place. So anyway, I went through hundreds and hundreds of stocks, and essentially the ones I selected was a company called BTX. Here we are, and there's a reason I chose these. I actually call this, and I believe other people use this terminology as well. These are what called fallen angels, and one of the patterns that we've discussed in the past is where you have this long period of accumulation in a stock, where you have bits of volume coming in, but nothing happens. It's just a very long period of accumulation. It can happen after a stock has fallen very dramatically. It can happen if it's a relatively new stock and it hasn't done very much, but it's a very interesting pattern, because at some point, after this very long sideways price action, although this is only a couple of months, then something will happen. Maybe there will be some news, and up it goes. And it's always sometimes happens what we call pump and dump. So it's going nowhere. Maybe there's some news that comes in about, this is a text, this is a healthcare, biotech, which are always volatile anyway, and it suddenly becomes the darling of the market. It's and the point you would be looking at in a stock like this is basically when you start to see it rise and you see the volume start to rise, and you think, that looks interesting. Then there's this massive, you can see here, big volume, and it actually went up to, I think it got up to almost 90. And then it promptly completely collapsed, as we can see here. Now, what's interesting, so that's what gives it its kind of fallen angel status. Now, unfortunately, what can happen is when stocks do this very dramatically, particularly in biotech. Biotech is one of those sectors that attracts a lot of attention, because stocks can go from $10 to $90, and you've got a 9-bagger, and it's a lot of traders spend their whole lives trying to find a stock like this. Now, supposing you were lucky enough to catch that ride. What's interesting also is you've got volume under this candle. Then can you see this pullback? Hardly any volume. So if you were riding this, you would say, oh, okay, fine, and up it goes. I suspect there would be volatility triggers all over the place. Then you have, it looks like a little bit of a gap, a huge tail underneath it. Can you see, with a candle? But look at the volume underneath it. Absolutely, it's ridiculous. It's half what this one and this one was. So that, you should smell a rat. And you think it's gone, apart from the fact that it's gone from 10 to 90 in what, a matter of days. There may be a good reason for that, but it's got the feel of a pump and dump. But no matter, if you've ridden it and you've sold, fine, and down it goes. But what's interesting is look at the volume. You have this wonderful waterfall, and it has it's like a balloon. It's kind of deflated, as it were, and it's gone sideways, and it's now at 15. But I've got some other metrics to show you as well. But this would be one to keep on the horizon, because it's what I call this fallen angel. And this is what I found most interesting, just looking at it on FinViz. But what I then did, because there's two parts to this, is actually to put it into Market Beat. Now, Market Beat, I have to say, the more I the more I explore this site, the free version, this is just the free version, the more I really am so impressed by it. It's absolutely amazing. Actually, just let me go back to BTX, because what does it say? There was a piece of news here. Yes, I think they're going to buy something. What else was here? The average volume, yes, you're talking about 7.8 million. Let's look at the ATR, see how volatile. At 2.5, yeah, it's, you know, it does move basically. So there we are. Let's go back to BTX on here. Let's go back to the beginning, profile. And it just gives you a background as what they do. You really, this is not relevant for a stock of this type. And we look at the chart. Hopefully it'll come up. And as I said, exactly playing out what we saw on FinViz, and it's moving sideways. Would it be suitable for trading on a daily basis? No, because the range is much, much too narrow. But there is an awful lot of volume going in. And what you can also check with the buying, I know we've talked about checking the options for any short, you know, the puts and calls, and also if we can find out, you know, what the short position is for this stock, is to look at the institutional ownership and to see if, you know, has there been some buying? Hasn't been, you know, a tremendous amount of buying, but, you know, there's enough in there to make it interesting. Obviously, being biotech, the news on this one would be certainly, you know, this is to do with cancer. I think it's, you know, very worthy company. And, you know, you would just keep an eye on it, not just from the chart pattern. The chart pattern is interesting because, as I said, it looks like a, you know, a fallen angel, and there is still volume going into it. It looks like potentially another accumulation phase after we had this, what I would call a pump and dump. And so it may be interesting to keep on your watch list. Now, the next one I came up, in fact, Brooklyn. What did I find on this one? Here we are. I just wanted to know a little. Oh, that's it. The other interesting fact about Brooklyn is that it is now set to join the Russell 3000. Now, the Russell, certainly the Russell 2000, is going to be reconfigured at the end of June. People are going to drop out and companies are going to be put in. And it also, and what's interesting is it's then going to be taken on as part of the people who passive investing, you know, on just follow an index. So that in itself is a very positive. Any stock that is taken into a major, if you remember, Tesla was put into the S&P, and after it went into the S&P, the price then went up. So that was the other reason it also caught my eye. But you start with the, you know, the chart. You look at what the chart shape is. You know, what's the volume kind of? You're kind of using volume as more of a clue. You know, you've had price action, but there's not been any move. And certainly in an accumulation phase, you find the volume going in, but the prices may not be, certainly not moving higher at that phase, but neither is it moving lower, particularly, you know, when you have this sort of, as I said, this saucer shape. Now, the other one that caught my eye was this one, and it's one called Skills. It's called Skills. And the reason, again, this caught my eye is it's the volume. And what I'm trying to find here is basically, just disable that for a second, excuse me. That's it. What I found interesting is I'm seeing a lot of volume going in, but not a lot going on, because with VPA, it's effort and result. Now, you know, and it's not always a bad thing. You might say, well, you know, it's not, in this case, it's not moving higher at the moment. It is simply this, but once you have a disconnect, then it's because something is going to happen. And what's interesting about this stock is this is an this is a new platform for esports. As I said, I looked at initially, I looked at the chart, I looked at the volume, and I looked at the price action, and I thought, a bit of a disconnect. What's so interesting about this? And it's got a number of factors interesting about this one. First of all, it's two things. There's a class action, but don't let that put you off. You can read about it on Market Beat, and also if you scroll down here, this is the class action. I won't go into about it, but I think it was something happened when people were buying and they shouldn't have. As I said, I really haven't gone too much into it. It's a bit like going into a rabbit hole. But the other interesting thing about it is, those of you who may have heard of Cathie Wood of ARK and her ETFs, she's this lady who is very well thought of in the investing community, because her ETF has gone absolutely gangbusters, because she's invested in Tesla, Bitcoin, all sorts of massively growth stocks that have done phenomenally well. I think the ETF has pulled back a fair bit since then, but anyway, she's a bit of a darling in terms of stock picking and what have you. But she's also taken quite a strong stake in this particular stock. So, but I didn't know that. All I saw the average volume numbers, the average volume, the volume, and I looked at the price action, and I'm thinking, right, okay, a bit of a disconnect. Something must be behind that. And in going over to StockBeat, you can then discover a little bit more about, what is this company, the analyst ratings, the chart itself, who the competitors are. As I believe it's a new company. Institutional ownership was something that was quite interesting. Yeah, 390. So there has been, significant buying in there, a little bit sold as well. And the nice thing about StockBeat, it pulls up all the social media. Someone obviously hates stock twits, but the thing about social media now is it's now even Wall Street has admitted that what is happening in in the markets with groups like Wall Street Bets and what have you, they can't ignore them anymore. They cannot ignore what I call activist traders, if you like. And whilst I'm not suggesting that you end up going down a rabbit hole, because you can do by sort of being led into these long threads about people who have very, very strong opinions, they are making a difference. They are having an influence, as you can see here. This person mentions AMC, CLOV, saying, oh, what a mistake. Well, if you can, I'm not saying, understanding the chart and understanding the price action and the volume, at least hopefully you will know sometimes you have to sell and take your profit. So that's skills. I don't think there are any options on there, are there? As you can see, the options. What the options are interesting is basically where you have maybe lots of calls and lots of puts. It's where the option market thinks this may or may not go. So that's skills. And what I'm going to do is, now that we've talked about the BTX and skills, I'm actually going to follow them up next time we do this, so we have some kind of narrative, and hopefully if I find one or two more interesting ones, then we will add them to the list, as it were. Now, meme stocks somewhere here, and I bet I've got rid of it. Let me just go and find it. I actually found a site which gives you, in fact, I'll do that and I'll come back to it afterwards. We will give you a list of what are the hot stocks at the moment, and I'm not suggesting it's because you should all pile into them, but it's where this very, very big cohort of traders is now focused on, and they have enough influence to actually move the market, and good luck to them. The other one that was interesting was Fuel Cell, and this is This is what I call another fallen angel, and we'll see more on the trading view stock. Again, looking at the average volume and the volume. I mean, it's massive. It's absolutely, and again, it's going sideways, and it's at the moment. It's trading at $9. So on an intraday basis, that's not really going to give you much of a range, but it's one to maybe think, hold and watch for later. But fuel cell, it's absolutely staggering. It's got a lot of short interest, so you could and lots of short interest, as we know, potentially set up for a short squeeze. But if we look at the chart, I really couldn't believe this when I saw it. Let's have a look, hopefully on the months. Yes, this is actually staggering. It was at one point $240, and it's down at $9. Now, the danger is you must never think that because something was $240, $217, $240, and because it's $9, and this is what a lot of investors make, saying, oh gosh, it was so expensive up there, it's so cheap now, oh gosh, this is definitely one to buy again because it has to go up. No, because it could actually go to zero. But this is such an interesting, it was an interesting chart when I looked at it in FinViz, and then when I looked at it in more detail in TradingView, again, I would call this most definitely a fallen angel stock. And again, looking through the institutional ownership, there's also been a tremendous amount of buying, 185 million going into this stock. And what caught my eye again was looking at the price action, very, very narrow spreads, lots of volume going in. So something is, something is possibly, going to happen with this stock when we're looking for. I suppose what I'm trying to say here is what I like to look at for these times is I like to see this accumulation and then find the point at which it is then going to break higher, and then the volume's being driven in at the moment, and then you will get even more going in, and gradually it will go higher and higher. And that's what the trick then is to then come out at the end of the run higher, which we saw on BTX, and unfortunately with a lot of the traders and investors, right, what happens is this has been going on for some considerable time, this accumulation, and they see it going higher and higher. And then there is news in the media. So, oh, this is fantastic, look at this stock, it's gone from 15, 16, it's gone up to 50. Oh gosh, then FOMO comes in, they jump in, and that's where a lot of people get stuck. It happens all the time, but you really need to be looking at it when it is down here. And I know we've looked at 3 stocks that have had very similar patterns to similar chart patterns, but there is one as well that I found. Let's have a look, ADM. And the reason I like this one is actually to show you where you've actually had a really nice trend higher. And again, using volume price analysis, I just want to take this bit of the trend here and look at this. This was like a shooting star. Again, a very classic VPA signal. Look at the volume underneath it, which is quite high. Then we have weakness. We didn't have a reversal. This is what I'm trying to say about VPA signals. That's what they are. They're just a first prompt, if you like, to say, look, pay attention. This is what could happen. And in fact, it did pull back, but it pulled back, gapped down, and it didn't kind of follow through. We had a bit of sideways, then it had another attempt at a move higher, but these are the candles you then want to see. You have narrowing spreads, you have reasonable volume underneath, and then you have this one, this tiny teeny little candle, and this isn't really going to go any further, and down, down, down. And this is a really nice waterfall where you've got rising volume. But then what happens then, just as we need to see rising volume nice spreads on the candles. We have buying coming in here, and then we have this anomaly under here. We have a lot of volume under there, but a very narrow candle. If that was all selling, that would be down here, as it were, and it isn't. In fact, the price has actually slightly reversed. But this is another pattern to have a look at, where something has had a really nice run high. I'm not saying, you know, 67, it could be anything. You've had a congestion phase, you've had a kind of distribution, maybe another attempt to run high, and then you get this really, really nice waterfall. And again, over, you know, very high volume on this stock as well. And again, go over to the market beat and see if there's any what the short interest is at the moment for this one. You can do all the, and also the institutional ownership is actually quite interesting to find out, are they actually buying? You know, there's quite a lot of buying going into this particular stock at the moment. So the chances are, yeah, that is, looks like that is genuine buying as well. And the last one, the Mimi stock, is Clover. It's one of the ones that is and again, this is another one that's been pumped. I call it, again, another pumping up stock. So we had a lot of volume, and then straight back down. Is this going? You know, this is the one that where they are all in at the moment. Now, with these wide candles that we see here, I would say, from an intraday perspective, as long as you don't have a bias that you think it must go up, then I would say there are trading opportunities down there. But what's interesting, the volume has fallen away, so maybe this will indeed go higher. And look at the volume. I mean, it's just insane. It really is insane. But, you know, it's if I didn't know it was a Mimi stock, I mean, probably that would have given it away. I would have said, yeah, another's kind of fallen angel. Not such a clear-cut accumulation phase along here, because it's had several attempts to rally, then it came back down again, and then up it. So it's had a bit of a roller coaster ride, as it were. And certainly since the beginning of 2021, we had this rise up, and then this really just this fall back down to March. But it hasn't been until the beginning of June when, you know, the traders have got hold of it for whatever reason. I don't know. Maybe they've got someone there who looks at the charts at the way we do, and they say, oh, let's go, you know, this looks like a nice one, let's go after this one. I don't know. I haven't. Maybe it was based on lots of short interest. I don't know. I'm going to pass over to David. I'm just going to find that site for you to have a look at, check out the Mimi stocks, and then that's it. And as I said, I'm going to be following through on these next week and looking at the charts, and also finding somewhere you can, looking at the daily charts in the slower time frame charts, to see what you could see and what you can maybe trade on the faster time frames. But as I said, that's just my initial introduction onto the stocks that I'm going to be focusing on, and if there is something to focus on, and I'll be adding to them as we move forward.
Hiya, back with me. I can, yeah. What's it called? Yeah. What, MIMI? Oh, MEME. MimiStocks.org. I will put it in here if I can. MimiStocks.org. There we go. There we are. That's it. Mimi Stocks. Yeah, MimiStocks.org. That's it. Just move that out of the way. There we are. Just going to have to wrap up because we've gone way over time as always. Sorry about that. Really nice move on the YM, carrying on up. If you recall, it was coming up to, I think we were down here somewhere, we're coming up to these levels, and now breaking out into low volume through here. So we're through that resistance. Very nice move, very solid move. Nice price action, nice and smooth. Nothing to frighten anyone there. Just have a quick look at it on Renko, multiple Renkos. Where are we? There we are. There you go. Multiple Renkos. Fantastic way to trade this stuff. Indeed, any market, but you know, I use it primarily for indices. Trend monitor down here, multiple time frames. I've got these set up as 15 second, 30 second, and 1 minute, and that's reflected up here. Just go and check. The Renko optimizer does all the hard work for me. So I'll just click on 15 second, just see what it tells me. It's telling me to trade at a 6-point brick size. So there we go. That's what we should be doing there. Let's just update this one. This is 30 second. Let's get that one into place. That's coming up at 8. So that's basically 8 points on there. And finally over onto the slowest one, which is the 1 minute. There we go. And that's delivering me 12. So there we go. Each of those bricks is worth 60 bucks, which is very handy. Thank you very much. Lovely jubbly, as Del Boy used to say. There we go. Sorry, UK sitcom for UK viewers. You might not have seen that elsewhere in the world. Probably doesn't mean much. So, but there we go. It is a really, really nice, powerful way to trade with non-time-based charts with the Renko. Multiple Renkos. What the Renko optimizer on NinjaTrader does, it does all the heavy lifting for you. It basically delivers the optimal brick size in any time frame, and just you don't even have to think about it, and it'll do it on any instrument, any market. If you're on gold, if you're on oil, commodities, whatever it be, softs, it will deliver the optimal setting. It'll calculate it for you and deliver it accordingly, and then you just trade away using the indicators down here in exactly the same way. And of course, we can also apply VPA because we've got the time-based equivalent charts below, and all the indicators work in exactly the same way. Yen here is falling away, is what we're going to see. It's falling away down there. Dollar's falling as well, so that's all good stuff. And in addition to that, the VIX is tracking down to sub 17, 1682 now at the moment. So that's all good and dandy too. Really, really solid way to trade using multiple Renkos in that way. I've also got the tick charts down here as well. Not sure what I've got. I've got the YM on here as well. So, you know, for non-time-based charts, either tick charts or Renko charts, very powerful because what they deliver is momentum. You see the raw momentum as it comes in. You don't see that on a time-based chart. You do on a tick chart or a Renko. Just update these here. That's on 89. This is on 144, so that's okay, and that's on 233. So just change that there. There we go. Because what you see on a non-time-based chart is momentum. The raw momentum, because it's independent of time, it's attached to a time-based chart, but that time-based chart has no impact on what you're actually seeing delivered on the chart. You see momentum delivered. There we go. Let's just wrap up there very quickly. Just show you where all the bits and pieces are. This is where you'll find all the indicators over at quantumtrading.com. MT45, NinjaTrader 7.8, TradingView, and TradeStation. 2 versions of TradeStation. I haven't pulled that up today, but there are 2 versions, TradeStation Global and TradeStation Securities. If you have an interactive broker's account, it's a great way to link it through to TradeStation. You can run the 2 together, and they work perfectly, and you can obviously trade off the screen. So you're trading off TradeStation through your IB account in all the markets that they offer, and to the using a deep discount brokerage. It's fantastic brokerage. You can literally trade anything and any instrument you care to name. TradingView, extremely popular at the moment. As you saw, we're working on the cryptocurrency strength indicator. That'll be available fairly soon. You can keep tabs on that on the Quantum Trading Labs site. Thereafter, we are possibly working on another crypto indicator as well to sit alongside that one. Then we're working on a VWAP, volume-weighted average indicator, again for TradingView. We're working backwards out of TradingView now because we've been in there for a while. And obviously over time, we will port many of these across to all the other platforms as well. If you've bought just one indicator, you always get a credit. If you're upgrading to something else, to a package or to the education program, whatever it may be, we'll always give you a credit for whatever it is you spent with us. And of course, if you invest in the full package, you get all future indicators we develop for that platform free of charge. It's as simple as that. This is the education program, the Forex education program. I know we have a lot of our students on the call at the moment. We've bolted on the funded Forex program. You trade our money basically at no risk. You can start at 5, 10, or 15,000 with an evaluation account, and once you've achieved a profit target at that level, we then multiply by 4. So if you start at 15,000, we increase that to 60,000. and thereafter it doubles. So you go 61, 22, 40. And as you go up the ladder, we give you a percentage kickback. It's 35% on the initial evaluation stage and then 50% on all the other levels up to $2 million or up to $1 million, at which point it increases to 60% kickback again, and that is paid monthly. So it becomes an interesting way to earn a living trading our money. Finally, this is where you'll find Anna and all the analysis we do and all the books. They're all up there in Kindle and in paperback version, and the links to all the sites as well. Just make sure I've answered all the questions. I think probably have. That's it. Jolly good. Thanks, Chris. You're welcome. I hope that answered that one for you. That's it. I hope you've enjoyed the session today. Sorry we ran over time a little bit. We will be back again next week. You're on the mailing list, so you will get the details of the webinars as we set them up. So thank you very much indeed for coming along today. We do appreciate you spending time with us. Hope you've enjoyed it. Hope you've learned something perhaps you didn't know before. And please stay safe and look after yourselves and enjoy the rest of the trading day and the rest of the trading week. We're off, I'm off probably dog walking now, take Bertie out for his afternoon stroll, and then we will be back for the rest of the trading day. So enjoy it, see you soon, and bye for now.